Aotearoa, and welcome to Tuesday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. Iran is claiming control of the Strait of Hormuz as the US backs away, unable to exert the pressure it thought it could. The pause in fighting there has calmed markets significantly, even if few ships are actually transiting. Elsewhere, the US durable goods order report for June was a strong one, up 8.9% from the same month a year ago, but only up 0.3% from May, so most of the gain was in prior months, and the June rise was much less than the anticipated 2.5%. Capital goods were up 4.1% from a year ago, but excluding defence and aircraft, they're up a good 14%. The Dallas Fed Regional Factory Survey was positive too, even if only marginally. That completes 7 consecutive months of only marginal changes, some up, some down. Price and wage pressures remained markedly elevated, they said. And there were 2 large US Treasury bond auctions overnight, both well supported, but both saw sharper rises in yields from the prior equivalent event a month ago. The 2-year median yield rose 13 basis points, and the 5-year yield rose 21 basis points on the same basis. In Canada, their central bank surveys market participants quarterly, and these professionals were less upbeat than in the previous survey. They saw no policy rate changes in 2026, but rises in the next 2 years. They also foresee a 25% chance of recession, although more likely growth in the 1 to 2% range. This is lower than in the prior survey. Trump's trade tensions are the main risks that they see. And Singapore has surprised markets with another tightening move, its second consecutive such shift. Singapore regulates its monetary policy via its exchange rate. It is raising its exchange rate to dampen inflationary pressures. The June CPI inflation rate there rose to 1.9%, its highest since August 2024. And Singapore's industrial production growth came in less than expected in June, up 7.2% from a year ago when a 9% rise was expected, down from almost 18% in May. And China reported strong industrial profit growth in June, up 15% from the same month a year ago, although this was less than the claimed 18% growth rate in the first half of 2026. They say their factory sector profits rose more than 20% on the year-to-date basis, but companies producing electricity saw theirs fall by more than 4%. Local listed companies did well, but foreign companies hardly made any gains. Local private companies came in between. Expectations are rising that the current Communist Party summit in Beijing will deliver new stimulus programs. And the Indonesian central bank chief has been pushed out with 2 years left on his term. The Indonesian government wasn't happy with the standard approach of the experienced governor and wanted the central bank to support its all-out drive for economic growth rather than inflation control. It was a sudden change, but one preceded by the president appointing a family member as a deputy governor earlier in the year. Indonesia has been suffering a weak currency due to political interference. In Europe, Spain, France and Italy are all battling out-of-control wildfires. Everywhere is battling intense heat there. The US Treasury 10-year yield is now just on 4.65%, down 3 basis points from yesterday at this time. And the price of gold has risen to $4,078 an ounce, up $26 from yesterday. Silver is now just on $58.50 an ounce, up 50 cents from yesterday. And oil prices have fallen sharply and by $8 from yesterday, now just over $82.50 a barrel in the US, while the international Brent price is under $89.50 a barrel and down $9. Hormuz transits, though, are still basically halted. There have been just 3 crude tankers and only 2 cargo ships exiting over the past 24 hours, and only 2 entering for new loads. The Red Sea is only marginally more active. And the IEA has been reviewing why oil markets have proven more resilient through the current crisis than some had feared, and they point out that oil output in countries not directly affected by the Persian Gulf troubles have risen notably, and most countries are permitting export flows. They also point out the major release of strategic reserves to cushion stocks, with 290 million barrels released so far, with more than 1 billion still in reserve. But they also note that markets for refined products are considerably tighter than for crude oil. The Kiwi dollar is down 20 basis points from yesterday at just on 57.7 US cents. Against the Aussie, we're down 30 basis points at 82.6 Australian cents. Against the euro, we're down 10 basis points at just under 50.8 euro cents. That all means our trade-weighted index starts today at 61.6, which is down 20 basis points from yesterday. And the Bitcoin price starts today at $64,917 and up 0.4% from yesterday. Volatility over the past 24 hours has been low, at just on plus or minus 0.9%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.